It's 17th of July 2014. This is a brief market update from HGCA. Grain prices have been very much depressed of late, really driven by the strong fundamental supply situation which faces the market this season. In terms of UK prices, feed wheat futures in the nearby position have reached levels that we haven't seen for 4 years, which takes us back to July 2010, which was essentially the beginning of the Russian drought and subsequent export ban, and then since then there were a number of feed grain issues principally driven by US maize. The strong fundamentals of production expected in 2014 have given us a real downward pressure on prices. In terms of grain market drivers at the moment, the focus really is on the production side at this stage. Really strong prospects there. The Northern Hemisphere wheat harvest is well underway. Quality is yet to be confirmed in any major detail. There has been some rain in parts of Europe, parts of the US, and so the market will keenly be looking for quality data as it comes forward over the next few weeks. Outside of the wheat market, maize, as always, is a big driver in the overall grain market, and crop conditions this year in big producers such as US, China and Ukraine actually look very good. Crop conditions at the moment in the US are at their strongest they've been for 20 years. And that's a real contrast to what we've seen in recent years, especially 2 years ago when we had the big US drought. July is a key month for the US maize crop, a key milestone in forming yield, and at this point in time crop conditions look very good, and so the world is starting to get a comfortable view of feed grain supplies, and those feed grain supplies themselves look like on the projections that they could well be comfortable keeping us in a subdued place on prices. However, as we move into the post-harvest position, the focus will shift away from the production fundamentals towards the trade and the demand. And one of the key questions is, how will global demand respond to these prices that we've not seen for 4 years? Will it be enough to stimulate additional demand? And in a related note, how will key importers in areas such as North Africa and the Middle East respond to lower wheat prices as well? Will they use this as an opportunity to basically stock up over and above beyond this year's demand needs and build carryover stocks into subsequent season? That remains to be seen. In terms of trade, it's been a bit of a slow year so far. US exports of wheat are around 23% down on where they were this time a year ago, although European export licenses are up slightly. So there's some way to go before we get any kind of clarity. So the Oilseed markets have broken through some key resistance levels, giving us prices we've not seen for 4 years. In terms of oilseed market drivers, it's really being driven by the strong production prospects we have in the Northern Hemisphere. In the US, farmers have planted a strong area of soybeans, and on top of that, growing conditions have been very, very good. In Europe, the prospect is for a record oilseed rape crop, which is adding further to that downward pressure. Bit of a question mark on a key watch area will be what happens in Canada with the condition of the crop there, and of course the logistics following the issues that were last year, so that's going to be a watch area. Although with oilseeds it's much less dominated by Northern Hemisphere production than in the grains. South America becoming a key player, getting more and more dominant, and South American farmers will start planting their soybeans in late 2014. One of the key questions is how will they respond to the low prices, and of course will we see any impact of a possible El Nino impact on South American growing conditions. On the demand and the trade side of things, again it's a question of how will the market respond to low prices. Can additional demand be stimulated by low prices? Only time will tell. We have a huge reliance in the oilseeds market now on China and their rapid imports of soybeans. So what happens in China has real implications for the global oilseed market and subsequent prices. And really, those are the key watch areas. There's a lot going on in grain and oilseed markets at the moment as the Northern Hemisphere harvest comes forward, and much is learnt about that, but also prospects for demand and trade and Southern Hemisphere production also become apparent, so it's really important to keep up to date. HGCA has a number of resources for you there. hgca.com/markets is the first port of call. Twitter, of course, as well, #HGCA markets, and a date for your diary longer term. Tuesday the 14th of October of this year is this year's Grain Market Outlook Conference in London, so I look forward to seeing you there.